Thanks for tuning into this earnings conversation with BloombergQuint. I'm Neeraj Shah. Well, investors in Metropolis couldn't have asked for a better quarter. A robust growth in revenues, operational metrics, as well as bottom line numbers naturally so. Companies sounded off that they are very keen to make some inorganic moves as well in the second half. Let me not misquote, or let me not even try and quote the management. Let's get the management to talk about how the feeling is post such a strong quarter, about the second half and maybe the outlook ahead, and talk about some more metrics. Ameera Shah, need no introduction, joins us right now to talk about that and more. Ameera, good having you. Hope all is safe and
Thank
congratulations
you.
on a good quarter.
Thank you so much.
Can you lay it out for us, Ameera? I mean, it just looks very, very strong. Is this sustainable, or some of the positives that you may have seen due to higher COVID tests, higher at-home collections might moderate a bit?
No, look, of course, there's bound to be seasonality, and COVID testing, as we've always maintained, is not completely in our control. As we know, the state, decides the pricing, which has been, coming down on pretty much on a monthly basis. Also, the amount of testing depends on, multiple things, whether people feel a vaccine is coming, the different kinds of tests introduced. So really, it's not in our control at all. And therefore, we've always maintained that our focus is going to be more on non-COVID and revenue. And COVID revenue, if it comes, we are happy to support the country in this crisis. And it's something which will keep fluctuating. So yes, Q2 was strong in West India, especially from a COVID revenue perspective. We have now seen, as of October, COVID volumes reducing in places like Maharashtra and Gujarat, which is a great positive. But they are also increasing in some other markets, and therefore, we are seeing an increase in certain markets of North and certain markets of South, but West is decreasing. So Q3 will be positive, but more focus on non-COVID.
Yeah, and it's interesting, right? That a management is saying that the business is going down, but it's good for the country, and therefore it's all good. Amira, what about the operational metrics? Because they seem very, very robust due to internal as well as external factors. Do you expect some moderation in the second half?
See, we've worked very hard behind the scenes on two, three areas. One thing is on automation, on digitization, on really finding efficiencies within our own system. We've been actually guiding for the last 3 quarters that we are working on this, and hopefully we'll see some of the results soon. These are some of the results which have come down and flowed to the bottom line. We hope that this process will continue, and that's what we are working towards. Obviously, some of the things like, we had not been able to give wage increases to our teams the entire 6 months. We did give them bonuses for the hard work done, but we have now come back and given them wage increases as of October. And therefore, some of those costs, obviously, which are very natural organic costs, will come back into the P&L, which will, not keep as superlative margins that we've seen in Q2, but we do believe that it will be better than last year margins in Q3. And so that's what we're working towards.
But I'm just trying to figure out, because of a combination of these wage increases as well as maybe the lower test of COVID, etc. This 31 half, can it like come off significantly, or would it just moderate slightly?
I mean, if you look at historical numbers, which was before COVID, usually in Q3, we've seen sort of a range between 25 and 27% EBITDA. And the reason is because Q3 tends to be the lowest quarter because of festivals in the whole year. So I think we should keep in mind that there is seasonality in our business, and therefore we should compare quarter on quarter, year on year, and not compare, sequential quarters, because there is a different level of infections, etc., that happen in different quarters. But overall, I mean, we are positive about Q3 compared to last year Q3, and we are hopeful that there will be an uptick in margins.
Okay. Now, just wondering, you yourself mentioned, I presume that, or if I'm not wrong, that it's impossible or near impossible to measure the quote unquote part, I mean, for lack of a better word, business that comes in from the COVID test because of various factors involved. But when I look at your quarter gone by, uh, July, August, September, and maybe even October, the non-COVID part of the business has seen sequential jump. Now, sequential may be a wrong way to look at it, but when you're saying that you are more confident about quarter three compared to last year, has October already shown signs of that? And is it spreading beyond what you usually used to get as non-COVID business? Because are people testing for various other kind of things as well?
Not really, not yet. And I think in non-COVID business, there is a gradual uptake. There is no hockey stick approach that's happening in healthcare, because you have to understand that people psychologically are still worried about completely resuming normalcy. While we are seeing an increase in elective surgeries in hospitals, while we are seeing an increase in OPD, cancer patients, stroke patients, has hepatitis patients, which were chronic patients, are coming back to do their diagnostics. But everything has not come back to 100% yet. So some markets where the psychological barriers were lower, we have seen go beyond 100% into positive zone. Some markets where the psychological barriers were higher, or where the lockdowns were more stringent, I think are still coming back to the normalcy of 100%. So I think it's a mixed bag. And it's not like now suddenly everybody is going out and consuming healthcare. It's not that way at all. I think we will continue to see a gradual uptick in the industry. And I think the organized players like ourselves, I don't have hard data, but my instinct tells me are benefiting more than the unorganized because of the concern around safety, professionalism, quality, hygiene that the consumer now has because of COVID. They are keen to go to a brand like ours where they know that they'll be taken care of, they'll be safe, things will be hygienic, there's less chance of getting any infection, and reports are correct, most important.
Now, that much I can assure you as well, Ameera, that people in and around me are actually trying to do that, and which is go to the branded players, the trustworthy players. Just one quick follow-up. I know you mentioned that depending on COVID revenues or COVID-related revenues might be a policy, but there is a belief, there is a Credit Suisse note this morning which says that the antibody test, there is a possibility of a very rapid rise in that. And even if the pricing comes off, the business generated out of that in quarter 3 could be pretty high. Any comments on that?
Look, I mean, I think antibody tests and PCR tests will all be required, in my belief, for the next few quarters to come. Because let's even assume all the scenarios. Let's assume a vaccine comes to us by earliest May next year, let's say September next year. Even when the vaccine comes, the effectiveness of these vaccines, as we know, can range anywhere from 50 to 90%, as Pfizer is saying. But we have to obviously see whether we have the cold chain to be able to distribute it and get that effectiveness. A point is the effectiveness is varied, and therefore people will have to do antibody tests to judge whether actually the vaccination has been effective for them or not. Second of all, PCR, while the wave has ended in certain states, it's beginning in other states. And we will believe that there might be second waves and third waves. So we don't know how long this is going to continue. So therefore, I think the antibody test, the PCR test, and all the new technologies that are coming, whether it's the CRISPR technology, the saliva-based test, we believe COVID as a product with multiple different varieties of tests will continue for the next few quarters to come. And potentially into the next many, many years, because it's not going to just suddenly disappear. Swine flu came about sometime in 2008, and still every year there is a seasonality of swine flu where suddenly a few cities get swine flu. It goes on for a few weeks, a few months, and then it dies down. So I think Corona will end up becoming something similar, and it will continue to be a product in the basket of companies like us for many, many years to come.
Learn to live with it. Okay, Abhira, last couple of questions. One is most of your peers in India, when I speak to them on the results, they say that there have what has gone down are costs, and both good costs and bad costs, and some of them may come back. The good costs may come back, but the bad costs will stay down. In your experience, last 6 months, what's gone down and stayed down, or will be eliminated largely, and what might come back in quarter 3, quarter 4?
So we've worked very hard to reduce our consumable costs, which obviously have been hard because COVID also has a higher consumable cost. But on the non-COVID, we've worked very hard to do that. There have been other costs, travel, obviously, communication. Those costs have come down because obviously people have been going out of their houses less. But we've also digitized certain things internally and reduced sort of administrative costs. We've not really been able to shut down any offices or anything of the sort, which has saved some big costs. But there have been a few centers that we've let go of, which we felt that were not productive. So I think there have been certain these costs down, most of which we believe are sustainable. The cost that will come back, obviously, is marketing we would want to continue to investing in, which we never really reduced in a drastic way. That's something we'll continue to invest in. And then obviously, like I said, wage increases for teams, bonuses, incentives, which will come back, which we would definitely want it to. There will be some other costs that will come back, like a cost of digitization itself will be a new cost on the P&L, which was not there earlier. So I think these are all investments more than costs in the way I see it.
Okay, last question, Ameera. How near is the near term for that mid and the large size acquisition? I mean, you've been asked this question, I'm sure, across all platforms. Is
Yeah.
there a rough timeline?
I mean, there's really no timeline. As you look historically, look at our if I look at our story, our journey, we've usually done about 1 to 2 acquisitions regularly every year. These have been smaller in size. We haven't done any very large acquisitions. Of course, it depends on the scale of the business you're at the time. We are open to mid-size and large acquisitions. We are open also to smaller acquisitions, but we're not open to very, very small ones because we believe that just doesn't add value to the business. And we are on the constant lookout. There's constant discussions happening. Obviously, if and when a deal happens is very difficult to tell. And therefore, we just keep our heads down and we keep doing the work we have to do. And of course, if there's some good news, we'll be happy to share it with the markets as soon as possible.
Yeah, I mean, I wouldn't want you to divulge anything which is out of the ordinary, but are you close to any large deal, or there are all possibilities on the table?
There's all possibilities on the table. I don't have any further information at this point, which could
Okay,
give any guidance on timeline or immediacy. It's sort of in the situation.
understandable. But anyways, yeah, keep up the good work, Ameera Shah. Stay safe, and most importantly to you and yours, a very happy Diwali and a prosperous New Year.
Happy Diwali to you too. Thank you so
Thank
much.
you so much. And viewers, thanks for tuning in to this earnings conversation with Metropolis. They came out with a rather robust quarter. The management expects some of the good work to continue in the quarters ahead.